Over the past decade, the landscape of financial advice has changed quite rapidly. In today's video, we're going to talk about 5 questions that you should consider asking your financial advisor to make sure that you are getting the level of advice that you deserve in today's day and age. Welcome to Couple Bowl. My name is Michael Dunham. With me today is Patrick Fontana, the founder of Fontana Financial Planning.
Cheers, Michael.
So, Patrick, in this video, what I thought we could do is I've got 5 questions, and we'll run down the list of those questions. I'll ask them to you, and then you can treat me like one of our clients or potential clients, and you can give the answer for how we handle these questions within our firm.
Okay.
So the first question that I have for you, Patrick, what planning opportunities did you find when you reviewed my tax return?
So I love this question because when we ask it of a potential client, the reality is financial advisors generally don't do this. And one of my struggles in my previous life at a wirehouse is I would get in trouble for talking taxes and asking about taxes, but it's absolutely crucial to do great financial planning to review the tax return. It reveals opportunities. It gives you the full picture. It allows you to give better advice, and it's incredibly important.
Yeah, a common example that I'll give is Roth conversions. There's a lot of advisors these days that discuss Roth conversions and implement Roth conversion strategies with their clients. Unfortunately, that doesn't always come with reviewing tax returns and planning for the next tax year. And that can lead to unintended tax consequences. It's very difficult to give high quality advice on something like a Roth conversion if you don't know all the specifics of somebody's tax situation.
How many times have we come around after the fact and found out that somebody could have done some of that Roth conversion for basically free, but they missed the window because no one was proactive or knowing what their income tax situation was till it was too late?
Exactly. So next question I have for you, Patrick. Are there any changes I need to make to my account titling or beneficiary designations after reviewing my estate plan?
Again, I'd say a very common weakness that advisors don't review the estate plan. It's incredibly important when you start looking at the details that we look for. You know, how are the beneficiaries listed? How are the assets held? Is it an individual account? Is it joint tenants with rights to survivorship? Is there a trust that's set up in the trust but not actually funded in the actual accounts? There's a ton of mistakes that happen here, and it's a huge needle mover. We've discovered on multiple occasions where beneficiary is listed as an ex-wife. There's all kinds of problems that if you don't get the details right, it's a big deal.
Yeah, the other area I'll bring up when it comes to estate planning is, often estate plans don't get updated for a number of years, and it's not uncommon that we will ask a new client what their estate plan says, and they will have no idea. And so that's one of the practices that we've implemented, is not only reviewing the estate plan, but also creating a snapshot to overview what does the estate plan say, so that 5 years from now, 10 years from now, when you can't remember the rules of the trust that you established or who you named as the executor to your estate or any of those key areas, we have a resource that we can pull up and quickly answer those questions.
Yes, sir. Fantastic.
So the next question I have for you, Patrick, what are the opportunities for me to give to charity more tax efficiently?
So one of the kind of founding principles of our firm that we're trying to drive for is to improve this area. We've got big charitable goals as a firm and a lot of charitable clients. There's huge moves that you can make when you have appreciated stock, when you have differentiation between one year to the next from a tax point of view, when you look at when you pay your property taxes, and when you make your charitable contributions. Am I itemizing? Am I not itemizing? Charitable game plans. If you're 70 and a half, can you do qualified charitable distributions? We bring up a lot of financial planning moves that save the client a lot of money tax-wise, but also give more to the great causes they support net at the end of the day.
Yeah, and I'll tie this back to question number 1 about reviewing the tax return. This is especially an area where if you're not looking at a client's tax return and understanding their specific tax situation, you can't give good advice when it comes to charitable planning. And so it all ties together, but there are many levers that we can pull that may or may not make sense until we know your specific tax situation. The other thing I'll bring up around charitable planning is there's a number of changes that are happening to the deductibility of charitable giving with the recently passed One Big Beautiful Bill. And so now it's more important than ever to understand how your tax situation may impact your ability to give to charity tax efficiently. All right, Patrick, next question for you. What is my Social Security game plan?
Yes. So this is something that I'd say is largely ignored. And we just had a case where after the fact, we come into a new client situation and there is an immediate answer that there's money on the table. They could turn on the Social Security now for one spouse and not miss out on any kind of growth on the other side. So Michael's done a fantastic job of building our Social Security reports that show a really clean synopsis, a one page of like, here's what's coming and here's the way to get the most money out of the system. At what point should I turn on Social Security? At what point should my spouse turn on Social Security? We used to do seminars just on Social Security, getting all the details about what to do. And now we've made it easy. If we have the client's record, husband and wife, and put it into Michael's tool to show here's what's going to come out, here's the best way to execute it. It's very important.
Yeah. And as with most of this, it comes back to getting the actual documents, right? We can't give good Social Security advice until we've seen your Social Security statement, your spouse's Social Security statement, so we know exactly what we're working with and what the optimized strategy for you and your situation is going to be. So if your advisor is not reviewing your specific Social Security statements, there's likely an opportunity or at least clarity that can be provided there. All right, last question for you, Patrick. What are we doing to prepare for taxes that may be caused by required minimum distributions and the 10-year rule?
So all too often, we're seeing a train coming of taxes, a big tax bill for folks that just delay touching IRA money that they owe taxes on for really no good reason. And if they can take that money and convert it to Roth IRA for a good deal from a tax point of view, it's a good thing. When you look down the line to the next generation, beyond the spouse that inherits the IRA, the children have that 10-year clock. And a lot of times the point where that family inherits parents' money, they're in their prime income earning years, making the most money they're ever going to make. And then they're forced to be taking money out of this retirement account where the opportunity can be missed. If the parents made less than the kids, they could have done some of those conversions for a much lesser tax bill.
Yeah. And one thing about that question, I think it does a good job of showing how all of the other questions that we've asked layer on top of each other, right? To give good advice here, we need to review your tax return. We need to review your estate plan to understand what are the dynamics of your family and those multi-generational impacts that may be relevant. We need to review your Social Security to know when it's going to turn on and how much it's going to be. And all of these things layer on top of each other. And if you are not having advice given where all of these factors are accounted for, there can be opportunities missed or negative impacts that you face down the road. So thank you so much for joining us on today's episode of Cup of Bowl. If you would like to discuss your specific situation and how some of these questions may impact the planning that you are doing, we have a link down below in the show notes where we'd be happy to have a complimentary introductory call with you. And in the meantime, Patrick, how do you want to wrap us up today?
I think this week maybe we can rebalance without missed opportunities.
Cheers.
Cheers.